So, quick little recap post FOMC. Um, just some things I wanted to discuss, right? We obviously have, we have a pretty notable reaction, but a nice little wick when we look at the daily perspective. Expiration yesterday, OPEX tomorrow. So I still think that the opportunity short side could come, but I really just want to discuss the beauty of some of these charts, right? The beauty of this lift chart, this Intel chart, mainly those two that have made tremendous runs from when, the chart starts to look very constructive and where you don't even need options. Um, you know, Something that I've been recognizing and understanding lately is just the opportunities go so much deeper than options, and oftentimes more than not, right? You're gonna have a beautiful opportunity on commons. I mean, I've said this before and I'll say it again. You'll see beautiful opportunities on commons long before you'll see the options trade set up, right? Um, and so things like that, I think, have been a very eye-opening experience lately. And just looking at this lift chart is a great example, right? We don't have an opportunity in April that's very appealing. We don't have an opportunity in August that's very appealing. The two kind of capitulations that sparked rallies. What we have here is the April rally setting up a really nice continuation and a really nice high low being put in within a gap. And if you look at this beaten down chart, right, the problem with a lot of these buyers, and I'm talking about just retail in general, on charts like Lyft and ARC names, and like the Unities, the AIs, the names that were beaten down 90+% from their 2021 highs and saw the preliminary signs in May of 2022 and January of 2022. The problem with buying all of those is, yes, on a higher time frame, that's going to be a more optimal position. Um, but you need, I mean, yeah, like this is beautiful. And you look at how it happens in April and how it happens in August of 2024. These catalyze the reversals. And then we get a little bit ahead of ourselves. We see the massive breakdown, and that's kind of your initial sign of a really strong bid. But regardless, I'm getting a little bit off track here. The character change is such an underappreciated part of how these structures develop, and it's such an underappreciated thing in terms of risk to reward, right? And especially just being able to appropriately allocate your capital, right? It makes much more sense to take a more optimal higher low on lift than it does to be adding in here and here, unless you're a long-term investor, right? I'm talking strictly on like multiple week to multiple month executions trade wise, not long-term investments or long-term holdings. Get in, get out, and let the back half of your position do the remainder of the work. And it's just phenomenal how it sets up here, right? We see the higher low within the earnings gap. We see the earnings report in August kind of spark some liquidity, lack of really aggressiveness or effort from those sellers, discounted higher low held, preliminary signs of a buyer within this peg, and the kind of lower high established and the draw being a little bit lower. And then just an absolutely easy 80% run into the May 2022 earnings gap that we had never really touched since May 2022, since the day after. And just a beautiful constructive daily chart where you don't even need to take options, right? We find our higher low here. We find our higher high, higher low, higher high, higher low. Rally into this week. We see a 9.7% session on Monday, an inside bar, and then a 18% gap yesterday, or 16% gap yesterday. And I don't even view any single execution in here options wise really worth my time, really worth my energy, because the options trading is more stressful, is more difficult, is something that you have to be more um, aware of, right? You can't necessarily, I mean, you can buy options and look away, but I don't like to do that. I don't want to do that, right? You're playing against time and volatility. You have to be a little bit more precise with your execution. And Lyft right here is just a great example of a phenomenal chart. You can cover a good chunk of your position. Let's say you get a 1370 bid, cover most of your position, 30%, 40%, and then 60 to 80. Beautiful. Um, Intel up 30% in pre-market, not surprised, right? And another chart that there was a beautiful opportunity in November into the election, right? This was a really clean look. But the lack of maturity behind the campaign back here is very notable as well, right? We have historic volume, the highest volume in decades. We have, I think it was like 20, I think these are 2013 levels is where we're kind of at down here. 2012, right? And we have historic volume. I think it's the highest since like 97, 93. Put in down here, well, 2007, and then even more. But the lack of maturity behind this campaign is notable. You want a little bit more of a, uh, when I talk about maturity of campaigns, I'm really just talking about the hands that have changed and the supply that's been wiped, which is what you're seeing in far as goals go within an accumulation, to wipe those ranges of supply and to collect inventory without massively bidding up the price of the stock. So the campaign's not necessarily super mature down here, and we get a little bit ahead of ourselves. We see a really aggressive leg, and then no lows taken out, right? And that's the one thing that really kind of strayed me away from this name is we never had that third low taken out until April, and then it was a little bit of an underperformer. It didn't get the most aggressive reversal that I would have liked, and then we see this earnings report with an anomaly, and then we see this really aggressive rally, and now for the fourth time we're sitting underneath this 2643 spot, seeing this compression, this coiled action within this notable amount of volume, seeing more volume on a 23% week and then the subsequent continuation, all underneath this 2643 spot. And I value this as a good commons opportunity, with 29 being the target. And then if you're, an investor down here, I think this is a great buy to 29 to 40. But it's 30% gaps overnight on names like Intel are very, very improbable. Like a highly traded liquid name, larger. I think this would be defined as a larger. I mean, I don't know the market cap on this. Let's actually look at it. Intel market cap. A larger volume traded name, right? It's a large cap company, $110 billion market capitalization. A large name like this, you don't oftentimes see, and I was waiting for that 2643 opportunity. You don't often see gaps like this on names like this with ease. It's because of how aggressively mature that campaign was. That's the sole reason why you're seeing a 30% gap up overnight, because this range right here has been developed. There is no supply within this range. The draw is going to probably be to 45 to 50 within the coming months or quarters. There's just a lack of supply and a draw that's going to be higher, especially when a catalyzing event like that sparks liquidity. So a phenomenal look on Intel, although it wasn't really my top watch. I think there's commons opportunity underneath 2643. Like I said, there's been a phenomenal amount of longs lately on commons, especially coming off of April, seeing a kind of lackluster amount of opportunities in May and June, and now continuing to see some longs on names that have been underperforming relative to how we've been moving in the broader equity market. Phenomenal look on Intel. I mean, I'm kind of flabbergasted at this, but this is a name that it's been on my radar since Q3 2024, and understanding the maturity and the established campaign that we have is just such an underappreciated edge, I think, in the financial markets, and a lot of people need to look at that. So I'm still looking pretty constructive. JD looking really nice on the commons trade. Like I said, more of a shorter term look for me. There's two trades sitting up here. There's the longer term positioning that I don't really want to touch on this name for 48 to 50. And then there's the shorter term, like 5 lower accumulation, 35 to 40. And you get an absolute easy move here up this 2 subsequent gaps downs that are getting bid the entire time. And then we see the reversal and the higher low put in a discount, the reclaim of the earnings candle, the rally, 2 inside bars, a nice pop on Tuesday, and then the gap up in the 35 on Wednesday. And, even if you get this $31 bid, you're up 15-16% on commons. That's a beautiful look. So that's a good look as well. UNH is looking relatively constructive. Obviously, we held the top of this May candle last Wednesday and saw a run into the gap. If this sweeps the gap, if this holds 335 on a nice daily constructive sequence, I do like the push to 380 on options. Just depends on the movement of how we kind of look going into the week, right? It's a little bit of an interesting time right now. I think there's a two-way trade setting up everywhere, right? Like not everywhere, but there's shorts that are vulnerable, there's longs that are vulnerable, but it's really speculative going forward about what the edge is, just because of the fact that I've said this time and time again, the window is closing, but we have these little windows opening every month, right? Like after this week, I think there's going to be a good amount of shorts that we can definitely kind of execute. Personally, in my opinion, I mean, these China names are running, and I'm not surprised, right? Like, I'm really not surprised that these are running. These are constructive charts. Look at where the volume comes in on that weekly chart on BABA. It doesn't come in at the highs; it comes in at the lows of this higher low. I'm not surprised that these are running. I don't like these so much. I like the JD. The JD chart is pretty good. That was one of my favorite ones, and that's probably it. But yeah, it's just the little things I think that are very important um, when understanding how to execute. And we look at Mag 7 names, the Tesla chart was phenomenal. I've been on this on comments for a while, and I think this can honestly, potentially push new highs if the equity market does not take a turn. AMD is down 5.6%, 5.2% this morning. Not necessarily my favorite look, not necessarily my favorite short right now in general at all. There's just not the cleanest edge. There was a nice edge here. I don't really necessarily like it that much within this range. Nvidia bled through the gap, but now seeing a nice pop off the Intel news. So I don't know. I don't fucking know. I like commons longs. I don't view many options trades setting up that I'm really appealed by. Is one thing that I feel like a lot of people kind of don't understand is like waiting for the opportunity to appropriately leverage and expose yourself to common or to options is a skill that a lot of people it takes a lot of time to master the skill of when to execute options, and it took me a lot of time to really understand how to utilize them in an appropriate manner. But just some beautiful opportunities that I'm looking at here. Intel, UNH, JD, Lyft, ZOM, even Rivian looks really constructive here following that Friday capitulation. The newsprint that got rebid. I don't know. There's some good looks right here, in my opinion. Like I think energy can push that gap fill at 94 and 118 on ZOM. That's really my only look on energy that's super appealing to me. Schwab was pretty nice, but never really offered a good trade. Now it's not necessarily super vulnerable anymore with this candle being put in. I don't know. Not much right now that I'm super, super, super focused on in terms of like what I want to trade on options. Just a lot of commons longs and a lot of shorts that I'm kind of waiting on the opportunity to capitalize on whenever the timing is right. And um, you know, you're not gonna you'll make less money trying to time the top and even appropriately timing the top. And I know that sounds counterintuitive, but if you time the top, you know how many times you're gonna have failed timing the top to in turn time the top. From somebody who tried to time the top, listen, you're gonna lose money trying to time the top, and when you eventually time the top, you're gonna have not made any money longing things, and you're gonna be shorting things, but you're gonna already be negative and you're gonna be fighting against it. Don't even try to time the top. Wait for the tape to flip. Just keep longing appropriately, shorting when you can, and then when the tape really starts to flip, right, which in my opinion, at this point, it might not flip until quarter two, late quarter one, quarter two of next year. But it could outweigh the quarter four flows. It depends. I don't know. Nobody knows what's going to happen. Is the thing. Nobody knows what is going to happen, and I feel like a lot of people underestimate the fact that nobody knows what's going to happen. It's about reacting to it. So quick little talk, Intel, JD, Lyft, little 15-minute chat.